Well, as you can see, Bitcoin secured the green weekly candle close, and we are now looking at our first candle, our first weekly candle with the potential to print above the golden pocket here. Hopefully we don't see any wicks below. Good morning, guys. It's Keith Allen. Hope everybody had a great weekend. Going to dive into the Bitcoin analysis here for you today. Kind of try and take a weekly view of things. And also we'll take a glimpse at ETH, which also seems to be attempting a breakout of its own. For starters, let's start over on fire charts here to take a look at liquidity. This is the range that really I have the most interest in. We're trading right in this level of resistance at 52, at the just above the 52K range. Lots of technical resistance here, and the liquidity now is is correlated with that. Downside, I'm interested in protecting this area right here. That's the top of the golden pocket, which, as you can see, is right about 48.6, right? So if we look at that in terms of where liquidity is placed on fire charts, we can see 48K kind of anchored here is the bottom of the range. And 48, we've got some liquidity coming in here, some bid liquidity that's protecting that area. 48.5, 48.7, 48.9. That to me is all showing signs of strength. Now, I'd be very happy to see a retest come back this way. And if we should get that retest and it does not penetrate the golden pocket, to me, that would be a very, very strong sign for Bitcoin. Looking here at daily, we printed, right? We tested this area, came out very strong, but we're running into this level of resistance here as we've been doing so since Thursday. So something interesting happened over the weekend. I had purchased back down, a week or so ago. I had made a purchase with the help of the MTF mean reversion indicator. I had bought down in this range, and even though I knew, in fact, I even shared with you guys on Friday that I felt like the weekend when TradFi was closed and the ETF faucet turned off, that things might pull back a little bit. Well, what happened? Exactly what I said happened, but what got my attention was the fact that we saw some selling happening from the purple class of whales, and let me clear these others out so it's easier to see. The purple class of whales and red sharks, red sharks have been buying using a TWAP strategy for really since Christmas. I mean, they've just been blasting and billions of dollars at this rate here, right? And so over the weekend, I started seeing those two order classes start to sell. Purple led the way, and shortly after, red followed. So before I went to bed, I decided to take a little bit of profit out of that position I bought down at 48.5. I still hold most of it. That was a 20% reduction in the size of the position, which is added to my longer term position. As part of my DCA strategy to build that longer term hodl spot. And so we did over the weekend on Saturday actually get that pullback, and so I bought back in here. Now, unfortunately, I'm running a test bot, a new setup. So these were small positions. It didn't equate what I had sold, but nonetheless, building. I actually thought that we'd pull back a little bit more, and I might get a couple more entries in DCA down. That hasn't happened yet, but as you can see, we're running into this resistance up here. Prices pulling back a little bit, and maybe we get another opportunity to go down into that range and pick up a little bit more. Would I be concerned? No. In fact, I'd really like to see it. Any pullback down to this level to me would be a test of support. And if we don't get any wicks down into this golden pocket, then in my opinion, that would validate the RS flip. Now, we always have to be prepared for a pullback, and there's a lot of talk about a 30% correction. Let's see what that would look like. A 10% or so would take us down to the 21-day moving average. A 15% would take us down to the 50-day. 20% gets us down to the 100-day moving average around 42.5, and this is a really important level for me. We've got a lot of history at that level, a lot of confluence down here, right? That would make that a pretty strong technical level. And of course, if we look at the order book, we can see that we have some bid liquidity stacked down in that range. Let me move this up a little bit. We can see that we've got, actually, I'm just going to look at here, this 55 range down. Okay. So you can see not only do we have liquidity here at 42, we've got a ladder stacked up above it trying to protect that range. So this would be very, very interesting to me if that is where a pullback went to. Could it go further? Absolutely. And that's why we're looking at all these different levels here. 30%. Where does 30% take us? 30% takes us right to about mid 36s. And if you look at that in terms of liquidity in the order book, well, guess what? That takes us right back into this pool of liquidity here. So all of those things would be interesting to me. I would not panic if we saw that pullback. I probably would not sell anything unless I just wanted to, well, you know, I won't say I won't sell anything. I may take a little bit of profit off of, a little bit more profit off the table of the last position I opened down at the 48.5 range, and build back in just to improve my cost basis. So, but I wouldn't panic, because if we hit this level, whatever the case, I think price long term is going to recover and recover very, very well. So at this point, I'm really looking for the biggest dips to buy, to start, to keep adding to my longer term position. The longer we spend up here, in my opinion, the less likely we are to go back to areas that I was really hopeful that we would go visit. For a long time, I expected to see us go retest 33 to 35 range. There's still some liquidity there, so it's certainly not off the table. But the longer we spend up here, the less likely we are to go down here, or even down to the 25K or sub 20K levels, which a few months ago I could build an argument for. It's hard to build that argument as we see the momentum happening now. I think the ETF, the Bitcoin spot ETF, has really, really changed the game here. It was a bit of a sell the news, buy the rumor, sell the news event. When it happened, there were some opportunities that came along with that, and now we're seeing it really translate into a considerable amount of Bitcoin demand. Quickly, I want to head over to the ETH chart. As I mentioned, ETH also on a macro fib retrace from the all-time high down to the swing low, and we're running into resistance right at not only where there's technical resistance in the chart, which I'm showing you here with this white line, but also at the 0.5 fib, right? So we're literally trading right at that line right now. This could also correct. And if it does, you would expect it to, pretty much go back to those key areas of support that we had recently. And if it doesn't, I would expect it to move up, more, north to the 0.618. Now, there are some technical and psychological resistance levels in between. ETH really likes to trade, really likes to trade those psychological levels. So I think 3,000 would be some psychological resistance anyways. Technicals have really kind of developed in that because of the time that we spent there. So let's see what that looks like really quick. Okay. This is right around that range. The white line that I drew is right around 3K. So you can see that we have some support and resistance right here at this level. Look, just drop it right in there. RS right here. We have support right here, wicks here, support here. So, right around that 3K level, I would expect a little bit of resistance. We're kind of in that zone right now. I can maybe increase this a little bit, but I mean, you can pretty much see what the story is there. There's also been more talk about a potential ETH ETF coming. I don't hear anything coming from the SEC at this point, but safe to assume that the market is thinking that this is likely to happen, and and they also think that it's going to happen the same way that the Bitcoin ETF happened. I can't comment on that. That's, you can do your own research on whether you think that's a reality or not. I think that the SEC views ETH and Bitcoin very, very differently. But that's for somebody else's channel. I'm just showing you what I see in the charts, and what I see is ETH right now at a very, very strong technical resistance. However, one that is quite probably going to be broken pretty soon. So if that happens, like I said, 3,000, the first line of technical resistance. After that, the 618 fib around 3,300, and so on and so forth. Hope this gives you a bit of an overview of what to look for this week. Nothing I share, as always, nothing I share should be considered trading advice. You got to do your own research and manage your own risk. One more thing I want to show you here quickly on the 3-year chart, if I haven't already, is that we have now got some ask liquidity moving up to all-time high territory, right? So you can see thinning out here. I already showed you that. We have this liquidity that was down, way down range, has moved up higher. The bid liquidity has moved up closer to the active trading range, and the ask liquidity is now starting to float up towards all-time high territory. And beyond, actually, right? Here's some at 75K. Not a lot, but as price moves up, expect to see these things fill in. The fact that that's happening now, to me, is an indication that at least one entity thinks that this could be happening in the not too distant future. So just some food for thought there, something to consider. Again, the ranges I'm worried about today, the market is closed. The TradFi markets are closed today because of President's Day holiday. There's been a lot of speculation over what that's going to mean in terms of the order book. In terms of Bitcoin price action. And as I mentioned before, I feel like with the, kind of new phase of Bitcoin in the post ETF era, I feel like on those days that TradFi is open and ETF demand is driving price, we see a lot of, price appreciation. When TradFi is closed, like it is on the weekends, we see some pullbacks, which is what we're dealing with today. So there was a lot of speculation over the fact that today is a U.S. holiday, that the market would be active and traders would be out here pumping price. Well, the reality is President's Day is not a huge holiday in the U.S. I would say that government employees and teachers are off work today, but most Americans are working today. So maybe some younger traders who are out of school today might be playing with the market a little bit, but expect things to go back to normal tomorrow. As for me, expect my analysis to be coming in a little bit later this week as it did today. My wife is out of town, and so that means I got double duty with kids in the morning. So I'll be shuttling kids back and forth in the morning before I get to my analysis, but I will crank them out for you every day. Today, I ran a little late just because, well, I had the opportunity to do so. Kids are sleeping in, and I wanted to dive a little deeper into the charts before I put out the analysis for you guys. Hope that helps you out and gives you a bead on what to be watching out for this week in the market. As always, nothing I share with you is trading advice. Hope you have a great day, a great week, and as always, trade safe, my friends.